Hey guys, welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm gonna give you guys a quick update on everything that happened last week and what's expected to come of this week. But before I get right into it, I'm gonna do a quick dad joke. Dad joke today is, what kind of law does a salad lawyer practice? What kind of law does a salad lawyer practice? Coleslaw. Get it? All right, so getting right into it. Last week, there wasn't a whole bunch of news, but we did get some updates in regards to continuing unemployment claims and how mortgage rates have been trending. Also, we got some updated appreciation data that you guys should really check out. So, getting right into it, we want to take a look at the appreciation data. So, everyone has been talking about how they're really concerned about how appreciation's doing or home prices are going up or down, all that stuff. But for the most part, it's been right in line with everything we've seen over the last really 80 100 years of us tracking the home loan or home appreciation market. So national average is still around 3 to 5%, which is right in the middle of 4% since the last 12 months. If you look at all these states all across the United States, you'd see pretty much they're all around the same range. 5%, anything above 5% is above average. Anything between 3 to 5% is average. So yes, it is unfortunate that we haven't seen the same appreciation between 2019 to 2022. Pretty much we averaged almost 10% every year, which, as you guys know, as a home buyer, that's extremely unsustainable. So it's good to see things are slowing down, but there's still appreciation. So just to give you an idea, on a $500,000 house, 4% appreciation is $20,000. So not a small number at all in regards to dollar amounts, but there is appreciation, just not as much as we had seen in the last since 2019 to 2022, which is a good thing again. So that's a really good sign. We're still seeing appreciation. It's just not as big as it used to be. That's all. We got really spoiled between those years, and I'm glad we're seeing more numbers that are in line with something that's a little more sustainable with home prices and being able to buy a home. Now, the next big thing is that the continuing unemployment claims have reached a 4-year peak. We're officially at 1.974 million people who are still filing for unemployment claims, and this number continues to go up. So this is the 4-year peak that we've seen, which has been finally reflected on the unemployment rate as well as all the jobs reports that we got 2 weeks ago. So as we continue to see these continued unemployment claims, this is going to contribute to the numbers on the unemployment rate next month. So as this unemployment rate goes up, so will mortgage rates come down, as we've seen 2 weeks ago when rates finally dipped down maybe almost a quarter to three quarters of a percent. So, or not 3/4 of a percent, but 3/8 of a percent. So that's a really good sign, just to give you guys an idea how rates have been trending over the last couple of weeks since the unemployment rate had come out. So to give you an idea, this is the point of where the unemployment rate came out, and then rates dropped basically a 1/4% overnight. So they're still remaining low on the low end, which is a good sign. And we're basically at a low since mid-April, or sorry, end of May. Or end of April, sorry. So we're finally going to see numbers come down. Maybe we'll see it surpass what we saw back in April, beginning of April, where numbers dip even lower. So that's the sign that we're hoping that rates come down, and then we have a bunch of people refinancing and buying homes at a much lower rate than what we were seeing before. Still quite a bit lower than where we started at the beginning of the year. The next thing is that this week, what we're getting is Wednesday and Thursday. We're going to get something called the first two inflation reports of this month. We're not expecting a whole lot of hope that it's going to come down because how the replacements are for that inflation calculation. They are expecting those numbers to go up. Now, they are expecting that it goes up to like 2.8 on the consumer price index inflation report. However, what we can say is, let's say, they expect it to go up 0.1%. If the inflation numbers come in and it stays at like 2.7, or it goes in lower than expected, that's a sign that the markets might still improve because the numbers were lower than expected. Sometimes they also improve if the numbers are expected. When I'm saying numbers, I'm talking about mortgage rates. So for example, if let's say the results come in and it comes in at 2.75, because that was lower than expected, the market might actually improve even though it went up because it's all lower than expected. So it's all based on the expectation. Now, if it's much higher than expectation, then the market's going to react to that. Mortgage rates will probably either flatten or get a little worse. Just depends on the situation. So we're not expecting a whole lot of improvement for inflation over the next couple months, because the replacement numbers that are being replaced on these calculations are really low, and that's what's unfortunate. So, but again, if they're better than expected, we might see improvements in mortgage rates still. So we will see. Otherwise, that's about all I got for you guys today. Hopefully you guys have a great week. Otherwise, nuke out.